Hello traders and welcome to another video review. Today is Tuesday, April 26, 2022. Let's take a look at the Forex calendar. During the London session, we don't have too many data scheduled for release. We got the Bank of Japan core CPI, trade balance, public sector net borrowing from the UK. However, none of this data is really a market mover. However, the New York session looks way better. First, we got durable goods orders from the US scheduled for release 2:30. Then we got the Bank of Canada Deputy Governor Timothy Lane will give a speech. At 4 p.m. we got consumer confidence data from the US, and this is the real market mover for today, and the new home sales scheduled for this at the same time, together with the Richmond Fed manufacturing index. So some data from the US are scheduled for release. Let's then take a look today at the American markets and the markets related to the USA. First one we are going to take a look at will be S&P 500. Daily time frame chart of the S&P 500 looks very bearish. It's because of the recent price action that looks like a wave 3 to the downside. Let me just update the whole, let's say, the whole Elliott wave counting. So I'm gonna just switch 1 degree higher. So what do we have here? From the top at 4,817 we got the wave A, which had been completed here. Then we got the wave B, and we are waiting for the wave C. Let's just change the degree of these waves. So let me just go here and put some higher degree, like minor, and we got A, B, and C. So this is the ABC pattern, the corrective pattern we would like to see very soon on the S&P 500. Wave B is in 3 waves. Wave A is in 3 waves. Wave B is in 3 waves. Now we need 5 waves to the downside in wave C, and we will have irregular flat simple correction cycle. So the wave C is, of course, the impulsive wave. So what we have in the last wave C already, we have the wave 1 done. Possibly we have the wave 2 completed, and then very big drop in wave C. However, it doesn't look like this wave C has been completed yet. We need a little bit more to the downside, and then of course consolidation wave 4 and wave 5. Then wave C is completed. I have some first targets here on this market. However, let me just put them once again. If we consider wave A is equal to the wave C, then of course 100% is around the level of 3,928. This is the equal legs target projection for the wave C. So we should extend this wave 5 somewhere here. Yes, there you go. Maybe, yeah, that would be much more visible. And wave C, of course, here on the wave, close to the wave 5. So we are expecting wave C to complete here. That would be perfect 1-to-1 market geometry. It would also means that this market is highly technical. Right now, this level will be downgraded to the regular technical resistance, and that one as well. I meant 4,488 and 4,422, together with this technical resistance level will be moved a little bit higher, because there is a bottom for the wave 1. This technical resistance is not that much valid. That one will be moved a little bit higher to the highs of the wave 2. So this is that one. The recent one is invalidated. We will leave 4,598. We will leave 4,638, the high of the wave 3, and we will leave 4,523 top of the wave 4,368 is the nearest technical resistance for now. We got this nice support here. As you can see, market reacted to this support. However, what I mean is 4,222. The low was 4,199, so only 23 points lower. We have a nice bounce, and now we are waiting for this market to continue the down move in wave 3, then wave 4, and wave 5. So this is how the S&P 500 looks like. Outlook is bearish. Let's take a look at the gold. Spot gold market on a daily time frame chart looks bearish. However, this wave B was way more expanded in time than we expected. However, there is still a kind of a nice pattern here to be observed. The high of the wave B was moved at the level of 1,997. This is now the typical retracement here. As we can see, coordinates of the retracement. I'm sorry, I want the retracement here. Coordinates style. The retracement level. Cannot move it. Can I go to the retracement? There you go. 05 and 61. So 38 is no longer valid. Almost retraced 61%. That's what I meant. So the high was 2000, 61% was 2004. It's $4 short of the 61% retracement. High of the wave B, wave A, B, wave C, brilliant corrective pattern, and now 1, 2, 3, 4, 5 to the downside, and we have wave C. So we can remove the 61%. We don't need it anymore. It's a history, and we will do the, of course, projection for the wave C. 100 is around 1,821. So this is the target for the wave C. Please notice the fact that it is very close to the long-term trend line support as well. The level of 1,917 is no longer valid. What do we have here? This one is no longer important. That one will be moved lower towards the wave B high. There you go. This is the technical resistance. This technical resistance is must be moved a little bit higher here, and let's stay with this one. So 2,000, 1,921, 1,965 technical resistances. We might put some kind of a resistance here at the bottom of this consolidation zone. So I think that somewhere around 1,915 is the next nearest technical resistance, and of course we need the move to the downside in wave C in order to complete this sequence. So right now our arrow is going here towards the level of 1,821. This is the next target for the market, and especially for the bears. Momentum is negative, is weak, so it supports the short-term outlook. What is going on oil? Crude oil daily time frame chart is showing us the sign of strength. So as you can see, S&P 500 is going down, gold is going down, crude oil is going down. What's supposed to go up is, of course, US dollar. Let's go back to the crude oil. The test of 108.42 was and 109.86, however, was completed, and it was completely false attempt to break out. We got big wave to the downside, big red arrow. Then we have the confirmation. For a few moments we stopped at 149, which is the technical support. Now this technical support is technical resistance, of course, and we are heading towards the wave C low, wave A low. So 95 and 92, 95 and 93.61 is the demand zone, and of course the technical support, horizontal technical support for the next wave down. So please keep an eye on this zone, because the momentum is already negative. It's weak, 43 points only. So if the bearish pressure intensify, we should take test this level, and then of course it's possible to break lower. Where's the next technical support? 88.23, the old high of the wave 3. However, the most important, in my opinion, technical support is this technical support around 84, 88 and 84.10. Very interesting. We don't need this line anymore, so let's remove it from the chart, and this is how it looks like from the bigger point of view. We have the 5 wave to the upside with wave 5 extremely extended, and if it is extremely extended, we have very deep sell-off, very deep correction, bounce, and then another leg to the downside. If this is the ABC pattern completed, then this is the of course the connector, so that's the wave X, and that will be A, B and C to the downside again. So we should see a complex corrective pattern on the crude oil. So crude oil done. Let's take a look at Bitcoin. The Bitcoin bulls are still defending the very important level, 38,575. This is the technical support, and we have a very interesting candle here. This candle looks like a pin bar, so we should see a bigger bounce on the Bitcoin soon. Where would we go after 20% of the retracement, of the correction, which is still lower than 25% of the recent of the last correction, last bigger correction. We are still below the short-term trend line, below key technical resistance, and below the supply zone. So we should see very soon the resumption of the downtrend, because despite the fact that we made this very nice pin bar, the momentum is still negative and weak. So if there is any sort of the reversal in this market, and if it is supported by the momentum that will drop lower, then of course the market would definitely say bye-bye to the levels of 40,000 and something, and will start to test 37,051 and then $4,290. So please keep an eye on this level. That scenario is invalidated only when 42,996 is violated, or the supply zone is clearly violated with a candle like, for example, this. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.